Good weekend, all. Ira Epstein of Linn Associates with your weekend update, your financial one for this Friday. And we're on the 23rd of October, 2020, and this will be your weekly version. So on the weekly, we'll look at one monthly chart, and then everything else is on the weekly basis. It's getting to be winter in Chicago. I'm back to wanting to get these done on Friday nights for people rather than late on Saturdays or Sundays. So my summer's basically over. Still working on my house. As all of you know, I've been doing a major rehab here, and I love doing it. It takes me away from the market. My wife thinks I'm crazy, but I really like it because I don't think about the markets. And I was at the dentist today. I think about the markets when I'm in the chart. You know, you live and breathe them. It's something you like or don't like. So where are we? Well, the debate yesterday, you know, I was looking for a lot more than that. When I was watching it, and I watched the whole thing, I walked away very upset for the Trump people. I don't think that he delivered the knockout blow he could have. I walked away upset with Vice President Biden because he turned off the oil people, and neither, I think, got points. So I think it changed nothing. What I do think it did is it changed the mind of Miss Pelosi. And I think she dug her heels in watching it even more and said, you know, we're not going to help the Donalds. We won't give anything until we'll make it appear we're all working on the COVID relief package because we want our voters to know how hard we're working for it, but it won't be until after the election. Well, after the election, what the heartbreak for everybody. What would have been the big thing? I'm just pointing it out. I live in Chicago. You know, we've just gone into our next stage of shutdowns. So we already have restaurant owners that are in defiance of the states trying to stay open. They're going to lose their licenses. That just adds to the woes. But if you see them on TV when you live here, you understand their pain. They're going to lose their businesses. They can't afford 2 weeks of no business. It's a disaster. And without the financial wherewithal to help them, they don't need the help in January when the landlord's taken the place away. And if you believe people aren't using these laws and skirting them and trying to evict people, read the news. It's all over the news. That's not quite what's going on. One other thing. You know we're going to have lawsuits galore after the election. If you don't believe it, start reading Bloomberg, Reuters, Dow Jones wires. There's stories galore about this. Both political parties have armies of attorneys ready to go. If you live in a big city, you watch this coming week, your windows are going to be boarded up again. It's happening in Chicago. It's going to happen elsewhere. People are going to get upset, and we know that there's a certain element out there that just wants to go in and destroy things. It's unfortunate, but it's the way it is. So let's go back to the markets. Enough of that. That's not political. I'm not telling you I'm a Democrat or Republican. I'm pointing it out at all of them. I'm anti-political. You should know that by now. As we take away the markets on a monthly basis, this, in other words, my takeaway of it, until you get back under this break low right here, which ended on September 30th of 33.52. The bulls have control. You've got a pattern that went up, made a new high, had a correction, and let's assume we finish like this. This is a monthly chart. So the month isn't over. I don't know that you can't break real hard and get under that. I wish I had that ability. But if you stay like this, there's two elements I'd look at then. Until that's taken out, by the next time after next week, what happens? We now have the election. So if you take it out, a bigger correction can happen all the way back here. Don't take it out. You could end up in this market 36,000 plus, 3,600 plus. 1,000, boy, that's the Dow. You could end up way plus on it. What about when we look at the area chart of just closing prices? Doesn't look that way. You'd have to get back under 32.87. So what the market did is it came up and down. Now this is a more interesting chart because if the market were to finish just like this next week, any close back over 34.73 and a quarter is a new leg to the upside because then you'd have higher high, a breakdown, and another higher high. You have reversed this pattern. All you've done so far is you came in, we had this big downtrend pattern, you saw that, and then we started up through everything. There was your correction. Now what's the next step? That's what we're looking for, but that's on a closing basis. When we take a look at a weekly bar chart, you can see the volatility that has stepped in. I've told you this, our clearing firm has raised margins, and I know many others are doing the same thing because you're starting to get the volatility pick up, and this is going to be a really volatile week, I would assume. By the way, you have earnings galore coming in the stock market, so that's going to be it too. But higher high, lower low, pullback, what do we have out of all this? A big nothing so far. You have a lower low, then a high that took out that high and a pullback. If this week takes out this week's high coming up of 34.9650, you could end up then with the higher low, and you already have the higher high pattern. That would be bullish. You'd have to get back under this low. So my trigger point to be bullish is getting over 34.9650, and there's nothing on this that turns me bearish. Why? If the market went straight down, I still have a higher high, lower low. So the bulls could grab control of the market. What numbers did the market fall to for support? I had mentioned to you this 18-week average is where I thought the correction ended. We had done these shows a bunch of times. That's how it worked out. I didn't know that it would go back up there, but I thought that you had reached your objective. That's what you've done. What about Bollinger Bands? If you can get another move going, 35.70 is your next upside target. Now that number will go up a little when we reopen Sunday because of how this is working, I think. You know, the math can change on me a little, but in looking at it, I'm fairly familiar how it works. And momentum is flat right here. So I have flat momentum, upside bias, the possibility of triggering another bull move. Now, let's do another thing in the what-if scenario. This is always the fun. You go up, you take out 34.9650, and then you come back down. Remember, we got 5 business days. You take this low out and you close lower than last week. You would then have lower highs, a lower low, setting up a potential to get back to 33.16. That's the only way that I see that the market can enter that downside scenario, but I've got to give it to you. And trying to say, oh, I'm going to have an outside week, I'm going to do this, it's so much, it's difficult. In the Nasdaq, you keep hitting the upper Bollinger Band and running out of steam. Now, in the Nasdaq, if you've watched, as interest rates have been going up, the Nasdaq has been coming under some pressure, and we are seeing that the Russell came alive. Now, some people, I was watching at the end of the day CNBC, and I think Carter was talking there. He's a pretty good chartist. And he was talking, he thinks 1% in the 10-year yield can be hit. Well, that's a big number. We're at 0.85 right now. It's not a number that I think does a lot of damage to the market, but it does mean that you're getting yields up to a point where you're shutting certain things down. And the question is, how does it affect this? What is the trend in this market right now? The trend is defined by the swing line as down. You have lower highs and a lower low. What is the bias? It's up. Why? As long as prices are closing over the 18-week average, that defines bias. It's up. Close under it, bias down. So while the swing line is down, the market is in check for that reason. What could turn the market bullish? Well, you'd have to get back over the 12,249, but that would put you over the upper Bollinger Band, and this market doesn't like to stay over that band. So it could get back up there and do that. It can do it easily, but right now it's easier for the market to slip back and find the support. When we come to the industrials, the Dow, lower low, higher high. What would turn the market bullish? This is just like the S&P. Your momentum is flat, the bias is up. If you were to take out this week's high of 28,669 and not take out this low, you'd have higher lows. You already have the higher high. Target could be the 29,286. The only thing that can hurt the market would be getting up, taking out that high, and then reversing in the week, closing lower on the week and taking out the low of this week. Again, that's the what-if scenario. It's too difficult. What's the strongest of the markets? The Russell. It was the first one to come down here, and it's the one that had a recent bullish crossover. See the 18-week average in red and the 100 average in green? Get a bullish crossover. You typically make a new high when that occurs. And this market, I'm waiting to see. Will it go up and do it? That's what I think it's going to do. Momentum up, bias up, and to keep the trend up, all you need to do is not take out this week's low and the trend will turn up in this chart. Take it out, different story. 30-year bonds, you're down to the Bollinger Band again. You came down here, you hit it, you bounced away, you've hit it again. But 3 weeks in a row, you're hitting it. That begins that gorilla glue trade, which tells me interest rates are climbing. I think the market's building in a Biden win, that there's going to be a massive amount of stimulus and interest rates are going to climb on that basis. 10-year note, same thing that I'm seeing. Downward here, trend down, stuck in this sideways action. Will it be able to break out of it? That becomes the wild part of the market. Until you take out the high that we made last week, which was 139.14, the bears have control, but you've hit your target. You hit the lower Bollinger Band and you did not close under it. You hit it and you closed back over it. Rough one. Dollar index, trend down. Lower highs, lower lows. Momentum arching, was going sideways, starting to turn down again. Potential target, the 9100 if this market wants to head lower. Eurocurrency, uptrend. You have a pattern of higher lows, higher highs, unless you get back and take out last week's low of 117.02. What the market's done is you've got the higher lows, higher highs. Momentum had been pointing down. It's starting to arc back. Could it be going to the 121 level? Traders will question that. Canadian dollar, flat momentum, no trend. Higher high, lower low. The market made one challenge here of the combination of the 100-day and the 100-week and 18-week moving average. And you did something else when that occurred. You had another bullish crossover. Watch. And you then went up and you've been making higher highs since then. It's already done that. So that crossover's met one of its targets. Japanese yen. I don't know why this market went so crazy this week to the upside, but it did, and it ran into its buzzsaw, the upper Bollinger Band. So when you see those things happen, always open up your weekly chart and say, what do I see there? Well, the 95.81 level was a lot of resistance, and we did pull back from that. We got as high as 95.90, so that number made sense. Bitcoin, bullish. Got a great piece of news from PayPal, who gave it something to be legitimate about. However, I have yet to see anyone use a Bitcoin to buy something on PayPal. I want them to report about it. I don't know people that use Bitcoin to do anything but buy them. Most people hold them or trade them. But going out into the marketplace and really using it as a digital currency, write me about it. I'd like to know who's doing that. Then we get to the energy sector. So today we added more rigs. We added another 6 rigs, I believe, in the crude area. We added 12 last week, 6 more now. We're pumping more oil. That's not bullish. Nat gas lost 1. The differential, the market is still staying under the 18-week average. So basically, the market is $1.92 difference between the two types. What is the trend? Well, you're in one of these pipes. You'll hear me say that. You get to the sideways action, it's generally an area you get churned up. The market gives you a breakout, doesn't exceed the Bollinger Band, comes snapping back. Sometimes you get an attempt at the upside. It fails there. The sideways action is necessary because what it does is it consolidates price for a while and then creates out of that consolidation, the market sentiment, fundamentals, whatever, takes over and the market starts a trend. If you were to say, Ira, here's a gun to your head. Which way? I want to be short until you take out last week's high. Last week's high in the market was 43.60. Potential could be the lower Bollinger Band. Take out 43.60, you're going to, and not hit that number, you're going to have higher lows, higher highs. You might be going to 45.82. You're in the middle of nothing right here. It's a difficult one. Same problem exists in the WTI crude, except it got a little uglier today. You closed back under the 18-week average. So while I've got the pattern of higher lows, higher highs, my bias turned down and my momentum is trying to turn down. But again, I think you're just stuck in sideways action. Rebob gasoline still in the bear camp. lower highs, basically a lower low, until you take out 120.82. I think the bears have control and they're trying to drop it. And if they can, 109.15 could be a target. So I put it all together, try to come up with game plans for you. Now remember, I'm going to tomorrow record for my paid subscribers their weekly video report. In that, we're going to cover 40 charts with a lot more studies, a lot more trade ideas. But the idea here of all these videos is this is my feeder video into my paid videos. Why? The paid videos where the meat is. You're getting here, these videos last 8 minutes, 10. Those are 20 minutes a day plus. They're not meant that you have to watch the whole thing. What they're meant is to give you these types of ideas. The charts have more studies on them than you're seeing here. There's more of me in it. I'm not physically in it. I'm talking to you and I'm giving you the best I've got for buy here, sell there, do this. Forget the word, here's what the pros are doing. Here's what this pro thinks you should be doing. Very different. And there's a difference there between the two, and I make that very clear. It includes a free phone app. Whether you have an iOS or an Android system, it doesn't matter. It works in both. When I put out my videos, or I put out, if you're a paid subscriber, for my full research, it does a push notification to you, tells you that it's ready, you just hit it, and it opens it up and it's playing. Wizardry, right? So you get that. It also, of course, plays in our charting software and it plays on our website. So there's 3 different ways you get to view it. I keep everything inexpensive, by the way. That is the goal. It's not to be that, oh, I need to get X amount of subscribers at $1,000 a year and that's it. Be great, but it's hard to do that, right? I know services that do it. I have friends with people that have them. But those people are generally, who are they catering to? In the futures industry, they're the grain merchants, the elevators, different people like that. When you look at this market, this is what I cover in this order. The reason I do it is on the bottom, you're going to see a scroll bar. You're going to pull it. And as you pull it, it's going to light up metal markets, energies, whatever section you want, just let go. It's going to play for you. So I save you the time. I make the reading fun. In other words, the viewing of this, because it's all about video today. That's the cool thing. And I try to do more and more for you. Your subscription includes access to my live webinars, which now that the winter's coming on, they'll be going on. Other people have to pay for them. My free reports to you, other people pay for those reports. All for $7.95. Go to your favorite coffee shop. Buy one of those lattes, whatever. You're in that range if you buy a big one of $7.95 with a tip. I don't need a tip. You're not committed to anything. If you want to keep going, it's fine. If you decide, hey, I really want this for a year, we offer a break on the price on that as well. You pay up front. How do you get this? Go to our website under the word research. It's all explained. Thank you for your time. Tell your friends about us. Our viewers and our subscribers on YouTube just keep going up, and that is the goal here. Make it keep growing. I'm Ira Epstein. You have a good day. I hope you become a subscriber. And by the way, with a subscription, if you call in, I do talk to you. I'm Ira. Take care.